Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Market rundown heading into Friday, Inauguration Day, January 20th. S&P 500 is still right on the verge here and looks like we closed just below the middle Bollinger Band, 2265.19. Certainly not a significant amount below that level, and SPY actually closed above its middle Bollinger Band. So we're going to have to see if we get some increased volatility tomorrow. Noon Eastern is when Trump's going to be talking, and usually it gets to some volatility and volume in the market when that happens. So we'll be looking for that to be a catalyst for a clear break, either a clear loss of this middle Bollinger Band support, which would have us looking at 2254 and 2234, or a new all-time high, which is just as easy for the bulls, I should say. Easy meaning we're right there, 2282. We just need $20 to the upside, and we've got a new all-time high, less than 1%. So tomorrow, potential catalyst, looking for a big high-volume move because we've been really tight the past 3-4 weeks. Pretty much all of 2017, we've been trading between the all-time high and the middle Bollinger Band support. Weekly time frame, you can see the very tight sideways trading that's going on. And we have inside candlesticks forming where last week is fitting completely within the week before it. And this week is fitting in completely within last week. So these are multiple inside candlesticks. And if we don't get a break tomorrow, next week we will absolutely get a break of these inside candlesticks. And that will give us some indication on the short-term direction as well. This is not a good trading environment for day traders with this back and forth. Green, red, green, red, green, red, green, red, back and forth. And the best trading we had was at the end of 2016 with these 3 red days. There were a lot of nice setups that had nice follow-through, but with all this choppy action, certainly makes the job more difficult. So traders really don't care what direction we head. We just want some nice, solid direction. Give us 2 days in a row of the same direction. So IWM is the weakest. New lower lows hit, closed down at near the low of the day, losing the lower Bollinger Band support. The 50-day moving average will be in the low $133 range and will likely be tested tomorrow. But very clearly, the bears are taking over as we see that we lost the middle Bollinger Band, and you can see the clear downtrend over the past month, whereas the S&P 500 still trading sideways. On the weekly, however, it is normal healthy consolidation. The bulls are still in full control, and we're looking down at support of 129.75. Anything above that level maintains a higher low on the weekly chart. We're consolidating, but it is normal and healthy, and the bulls are still in control. QQQ is the strongest new all-time high today. Certainly a bearish reversal candlestick with a lot of profit taking, but can't disregard the fact that we keep hitting new all-time highs here, while the other two have been unable to do so over the past 3 to 4 weeks. So we're looking now at support 122.43, 121.60, these little consolidation lows, and the all-time high resistance 123.65. Weekly time frame is a bearish reversal candlestick. Rejecting from the upper Bollinger Band, looks like we're either going to see a doji or a spinning top. A red week next week would confirm that consolidation. But looking at the weekly time frame, you can see a very clear uptrend, and coming off of breakout mode over the past 2 weeks, where neither the S&P 500 nor IWM were anywhere near that strong. So still the same rankings of strength here. We've got IWM the weakest, S&P 500 in the middle, QQQ the lead bull. And tomorrow we'll see if this inauguration gives some catalyst, some volume, and volatility to break out of this S&P 500 tight range that we've been in for quite some time now. We'll check back in over the weekend. I appreciate you watching, and we'll see you then.